Yes, people, welcome back to my channel and welcome back to episode 3 of my 100k FTMO challenge. Thank you guys for following along, and thank you guys for watching the previous episode and all the comments that you put in the comment section below. It's great feedback. Obviously, it's part of the journey. We are going to make mistakes. I'm helping people pick things up and take some inspiration from my journey as I go along, the emotions, the highs, the lows, and everything that comes with being a trader. So picking up where we left off last week, this was the last trade that we had on the account, and we finished the week at 0.82% profit, I believe, from last week. This week's been a really good week in terms of the market, in terms of psychology, in terms of controlling emotions as well. You'll see through the trades that we had this week that we did pretty well in the markets, and yeah, I'll just pick up from the previous trade. So starting off with this trade here. So I remember at the start of the week I actually didn't trade until Tuesday. So Monday left that. There was nothing really going on Monday, so didn't take any trades on Monday. First trade was actually taken on Tuesday, and as you can see here already, it was a win. I'm just gonna open the before and after just so you guys can see as normal the before and after of the trade, my thinking around it and how the trade actually played out. So with this trade here, as you can see, we've got the 2022 setup formed on the charts. In my thinking around this was that on the high time frame, price is showing more bullish momentum into this 4-hour fair value gap in here. So that was the halfway point within the 4-hour fair value gap, but price had spiked into it all the way through London session in the morning. Price was just moving upwards, and I knew that it was gravitating towards this 4-hour fair value gap. So within here I was looking for shorts, and that's what presented itself. So price has also cleared a lot of buy side liquidity in here. As you can see, previous day's high, 4-hour buy side liquidity over here, tapped into that, and then the setup formed like after, as you can see, another sweep of liquidity, and then you had the market shift here. It wasn't the cleanest and the most convincing for me, to be honest. As you can see, usually I prefer price to have that spike up and then have an aggressive move down to break market structure shift here. This was on a 5-minute time frame, but as you can see, price tapped into the fair value gap, took out liquidity again, and then it just slowly made its way down here, then moved up, and then had the displacement move down here to break market structure shift here. Left a 5-minute fair value gap which I was looking to take and enter into. Stops above that previous high with a couple of pips just for spread, and then looking for easy targets, to be honest, which was this sell side liquidity down here, easy hanging fruit. So that's what I was targeting for my first take profit. So on top of that, dollar actually had a break of structure towards the upside, so that kind of gave me more confidence that EU was going to drop as well if dollars inversely correlated with the dollar. So when one goes up, the other ideally should be going down. With the trade take profit, I was just looking for a 1-to-1 because I did feel like it was a higher risk trade, and the position size was a lot smaller, so it was only 0.25. So keeping risk management to what it is up until I build that buffer, like I mentioned in the previous video. And then I was just expecting price to come down, to be honest. I just wanted to see price start making its way down within the New York session AM, but this, as you can see, is what happened. So price made its way down here. I think this was around lunchtime, yeah. Touched into this order block here, which I expected some kind of reaction or resistance from here. It did that, as you can see, just consolidated a little bit all the way into the PM session, reverse back up here towards my entry level, and then at this point, as I mentioned before, I don't really like to keep trades held overnight unless it's got really high confluence with it and I'm happy with it and it's away from my entry, because usually I like to put my stops at break even if I am going to hold it overnight, but As you can see, as price was over here at the end of the trading session or the trading day, I wasn't able to put my stops at break even because it probably just would have tapped me out. And then as you can see, throughout the night into London session, that's when it actually went to take profit. So if I held overnight with the stops above here, then it would have been a full winner. But because I wasn't able to leave or put my stop loss at break even, then I just thought I'll close early, which as you can see, the time I did close out, it closed at like $8 profit. So this was probably around towards the end of the trading day, the New York trading session before Asia. As you can see down here, closed around here, and then price came back up. So that was the first trade, only a small little $80 win. If it did come down here and tap in and left it overnight, it would have been a 250 win. But you know, as I said, just risk management until I build that buffer, and then I'll be able to hold trades overnight, depending on obviously the market structure of price at the current time. Next one is another win, which is nice to see. I'll open up here. So those would have been back-to-back wins, but it is what it is. So this was actually a really good trade. I was happy with this one because of the way the markets was moving. There was just a lot of confidence around this, and I was just really happy and confident to take the trade. There was news on this day as well, so ideally I wanted to be out of the trade before news, but I knew that could have been a possibility. That price just hangs around a little bit before it uses the injection of liquidity through the news to then go in direction whichever way it was going to go. So the confluences for this and the reason why I took the trade, well, we had a 15-minute liquidity run, as you can see down here. You had price tap into the optimum trade entry from the swing move down here to down here, and that was just the OTE of it. Sell side liquidity down here, and all this over here as well through Asia. So price just went into there, stuck around for a little bit into the start of New York session, and then it had this displacement move here, which broke this market structure shift and this little swing high. Left the order block on a 15-minute fair value gap, so it's on the high time frame, which gave me more confidence in the trade, because you know, when you're messing around on these low time frames, you kind of get stuck and you tend to forget the higher time frame narrative. That's what a lot of people struggle with when they're on the lower time frame. The higher time frame might be bearish, but then because they're in the lower time frame and it's bullish, they get caught up in that trend. It's high, buy it up to certain highs, but then overall the trend was bearish, and then they should have been selling but then they were buying because they were stuck on the long time frame. So just that being on the 15-minute just gave me more confidence. It did take out this buy side liquidity up here before it came and tapped me back into my entry. So as you can see, price broke structure and then started moving up, tapped into the buy side liquidity, and then came back down. So I was a bit hesitant to actually take it, but I thought, do you know what, I'd rather just put the trade on. My stops are at a good level down here anyway, so I'd rather not be scared and wary, even though I knew that price had a good reason to come up to buy side liquidity up here into the halfway of that fair value gap as well. So I thought, let me just put the trade risk on. It had a nice reaction from the 15-minute order block and the fair value gap, which is high probability. The only thing that was making me think that price could potentially turn bearish is the fact that we have taken buy side liquidity. Like I said, it's tapped into a 4-hour fair value gap, which could support bearish intent. The dollar looks to have more bearish drawn liquidity, which supports bullish EU. And I said, you know, we've got FOMC in the PM session, so let's see what happens. And as you can see on the after, price tapped into the fair value gap twice, so you could have got two entries into that. Started making its way up here, and you can see the price action was kind of lagging a little bit, little small candles towards the end of the day. And then, actually, my bad. So there was FOMC the next day. No, this is the FOMC candle. This is what happened at FOMC. This little spike here. So FOMC just gave a spike reaction either side. So I decided to hold overnight because I believe price would still draw higher. The trade played out nicely overnight, and just before EU PMI news in London session, but I was out of the trade by then. And the only reason I held overnight was because the trade was taken on the 15-minute, like I said. And by the time I got to the end of the trading day, price was not near my entry, so I was able to put my stop loss a little bit higher up because I knew there was going to be some kind of injection of liquidity in the morning. So as you can see, that candle there just spiked either sides, and then the price started moving up. By that time, I was able to put my stops a little bit closer, so lower risk. And then I did put it to break even, just so to protect myself and take the risk off the table. Held overnight, and in the morning, that's when price then took me out to a full take profit. Straight after that, which is one thing that I did do want to mention, there was a part of me that wanted to hold the trade open because I knew there's going to be a news release in a couple of minutes, and I knew that there was a order block up here that price would likely drop up to. But in my experience of backtesting, I know I've seen price literally take that buy side liquidity, tap into this 4-hour fair value gap or high time frame PD array, and then absolutely tank in the opposite direction. So just to secure myself the position and take money out of the markets, then I decided to close a full trade. When I do have that buffer, that's when I'm more likely to, let's say, put my stops up here like Australian stop, and then just see what price wants to do. Then at least I'm securing some of this position here after already having that buffer on the account. So that was that trade. And then the final trade of the week, so I actually only took 3 trades this week. As you can see, those on the 20th, the 21st, and then the 23rd, so a couple of days in between. Anyway, this was taken on the Friday, and I'm a bit annoyed with this trade because part of me just knew not to take the trade, but I still took it anyway, and I'll show you why. So this is what it looked like before, and this is what the entry looked like. And it's one of those things where I feel like, because I was looking at the charts, and I feel like deep down I was trying to just take another trade. That's why I put myself in this position. Whereas realistically, obviously hindsight's 2020. If I look at the price action and it being on a Friday as well, knowing what price likes to behave like on a Friday, probably would not have taken this trade, because the dollar was also showing bearish intent and bearish market structure on the 1 hour time frame. This is the reason why I took this trade. So dollar was showing bearish market structure on the 1 hour time frame, supporting possible retracement from EU back into the range. I was targeting these relative equal highs up there with the 15-minute fair value gap on top of it. I was thinking it's looking like a low resistance liquidity run. As you can see, there's not a lot of price points here to resist the price on its way up, and only a 0.25% risk, as it's the end of the week, and to try and get that 2% buffer. This is why I took the trade. Price held these PD arrays here and then invalidated me and then stopped me out, which I'll show you, and then after. So I was looking at that 15-minute fair value gap with a breaker block, which I thought was order block here. So I was expecting this to support price and then push it up here into this buy side liquidity, as I mentioned before. This was the liquidity run I was looking at before, so the trade did fit the criteria, but I was just on the opposite side. I'll tell you why. So as you can see, which is so annoying, price, once it broke down on these PD arrays here, this spike moved down. I was hoping it has a little retracement back into a fair value gap here, that way I can close the position out, or even hoping that price comes up back to my entry and I can close it. At this point I just knew I was offside. Unfortunately, price came down, and that's probably the most annoying thing that I've had a couple of times, where it's spiked me out right there, come back. But that's another lesson learned, because usually I'll have a 5 pip extra stop loss from here. So rather than having the stop loss at the low, I'll have an extra 5 pips. On this one it was 2.5, so if I had the extra 2.5 here, then I still would have been able to keep myself in the trade, come up, and then actually close it break even. Now the reason why I'm saying I was a bit 50-50 about it, which maybe I can take into consideration next time, is the fact that price did all this. So that's a high time frame PD array being an order block. as in the news spat into it, and then as you can see here, had this little market structure shift here, right? Came back, filled that fair value gap, and started breaking down, which would have been a really nice trade for the sell, but I didn't take it just because I thought, you know what, we've just had some news, liquidity, volatility. Let me just leave that up for now. Let me look for something more clean. This was on Thursday. Came down, and then this was the setup on Friday. If I'm being honest, this sell makes way more sense because as you can see, that swing high to that swing low, prices come back, worked its way back into this premium area here, so equilibrium's here, worked its way back up into these areas here into premium, and then you'd be looking to take the shorts here, which price kind of showed itself with the liquidity run, market structure shift here, came back, tapped in, but with that being Friday, I expect this to play out maybe on Monday to come down to these lows here. So it is what it is. I'm just, the positive I can take that from that is that I only put 0.25 risk on the trade, didn't lose too much, ended the week at 1.5% on the account, so as I said, not too far from that 2% buffer. Compounding these wins as they come, risk management is good so far, and psychology has been good as well, so I hope to take that into this week. We'll see what opportunities present themselves and hopefully get some more wins to see ourselves over that 2% buffer, and then start increasing the lot size and position size on each trade. That's all for today, guys. Thank you for watching, thank you for tuning in. Any feedback, any comments, obviously put it in the comment section. Appreciate you guys as always. So just quickly before I end this episode 3, I just want to touch base off that final trade and show you guys how it actually played out, because today's Monday. Obviously we reviewed the trades over the weekend. Today's a new trading week, but this was obviously the previous trade that I was talking about in terms of my entry and how I got stopped out if it decides to open up. Alright, cool. Yeah, so this is how I got stopped out on Friday, as you can see, and then obviously over the weekend the trade kind of just price played out itself a little bit. Coming into today, this is how the trade actually went, and this is how price played itself out. So this is a good lesson on how you can be right and wrong at the same time. And ICT always talks about, as long as you're making money in the markets, that's the most important thing. Like, you can be right but still make money, and you can be wrong but still make money. It just depends on your trading strategy and whereabouts you're taking profit and all that kind of stuff. So for example, this trade here, and also following your trading plan, because essentially I could have still been in this trade, or at least I could have got out on break even, because remember I talked about if my stops had an extra 2.5 pips, then I still would have been in the trade. So that was the low, that was only 2.5 pips below the low, but I usually have an extra 5 pips below the low, so that actually would have been me kept in the trade. Come back, would have been closing at break even here. So back to the charts. So that was a trade essentially. If you remember, that was the sweep that I was looking at over here, and then this was the market structure shift that I was looking at, and then that was the fair value gap that I was looking to enter on, which was a 15-minute. Entry was here, I believe, and then see that 2.5 there where I got stopped out, but usually that should have been there, and that was the target above there. So this is how it should have actually played out if I followed my trading plan and I had extra couple of pips below the low as usual, as you can see there. Yep, that would have been my actual stop loss there. Would have kept me in the trade. I could have got out of break even at some point at least, and never would have held the trade over the weekend anyway, so it's kind of pointless, because at least the minimum would have been like a smaller loss, or if not a break even up here as well. Price ended up playing out over the weekend. This is today's open through London session. Carried on moving upwards. As you can see, not a lot of resistance over here, and then ended up tapping to that buy side liquidity and 15-minute fair value gap as mentioned before. So if I held over the weekend, which I normally don't do anyway, that would have been a winner, but just wanted to show you guys at the end. I am currently live in a trade, but you guys will see how that plays out, you know, on episode 4. This is the first trade I've taken this week. As you can see, yeah, this is what it's looking like right now. Just targeting sell side down here, but we'll speak about that in the next video. And just to finish off, I'm going to show you the account metrics as it is so far. So we're still pretty much near the start, but we're slowly building that equity curve as we go along. You know, it doesn't look like a steep climb right now, but over the course of series trades and over the course of the time I've got this account, we are looking to finally build that up to the 10% profit target. So account sitting on where are we? Yeah, balance currently 1.5% starting the week, and we'll see how the rest of the week goes and hopefully come out in profit. Apart from that, see you in the next episode. Peace, love. See you on the next page.